So this is weekly commentary 31. Now, before we go into the technicals, I want to touch on, some sort of theory with you guys. So let's look at last week's news, right? So it was the week starting the 19th on the Monday. Now, look at how many red folders there were. Now, look at the date of the week starting. Would you agree that the week starting the 19th is, you know, it's the second last week of the month? So it's the middle end of the month, right? Now, let's think about something. Let's think about a monthly candle. How does a candle, you know, let's say it's a bullish candle. How does a bullish candle, any candle, minute or 10-year candle, how does it form? Open, low, high, and close. Now, from the open to the low, that happens relatively quick. And then from the low to the high, that's called the expansion. Now, the expansion happens, you know, and if you take that candle's lifetime, it happens, you know, in the middle portion of that candle's form, like the time taken for that candle to form, and towards the end of it, right? And right before the candle's kind of come to end, it's gonna close, of course, right? And it will close near the high of the candle. So a 15-minute candle, for example, the first, you know, 5 minutes may within the first 5 minutes, the low will be made of a 5-minute candle, and then the remaining time will be used to make the expansion of that candle. Same thing, open, low, high, close. This is the name of the game when we're looking at trading now. And I've had to wait for you guys to get on to a more developed level. And to the new guys watching this, might sound a bit crazy and open, low, high, close. What does that mean? When you watch the weekly commentaries and follow the content up until this point, you will understand what I'm saying, right? You have to look at it like that for the monthly as well. Now, out of the month of September, any month, when do you think that expansion of the monthly candle is going to occur? Weeks like this. Now, where is this week placed in the month? The middle and the end. That is how you anticipate very large moves in the market. Now, you see these news events, they're not random. Look at it. Look at every single NFP, FOMC, GDP quarters, GDP a month on month, Q on Q. Look at all the consumer confidence. Look at all of those news events. They happen on the same day every month. It happens every single month, right? And why? Because this is what allows the market to flow, right? They need the excuse to push price. Now, isn't it so, random how we have a very manipulative news event being the NFP at the start of every single month, the first Friday? It's not like, the monthly candle needs manipulation to make the opposite end of the range. That Judah swing, and there's a very significant folder at the start of every single month. This is the things that you guys need to pay attention to, and this is the thing that retail, they will never clock onto it. When you see weeks like this, look at your monthly chart and where the expansion is likely to go. Having that direction from the monthly chart then feeds down to your weekly, daily, and that's your intraday navigation, right? So just bear that in mind. Now let's go to the the technicals, right? So before we touch on where I expect the DXY to go further. You see, at the start of the mentorship, if you're watching the older weekly commentaries, right? We started you know, the mentorship around was around here, I believe. It was like one of these two candles we started it, right? Now, when we had this, right, we didn't have none of this. We were working in this range from this high to this low. Now, if we zoom out, right, on the DXY, this is a big reason why I was very bullish on the DXY. What is resting beneath here? Sell side liquidity, right? Sell side liquidity is resting beneath these lows, right? Now what happened? We went higher and we've taken, right? Look how much time we accumulated under these lows, right? And then what happened? That displacement away And where do we expect price to trade to ultimately? Well, my eye is here, but we have resistance built into the run there. Why? Because we have these fair value gaps, this order block right here, right? These premium price arrays will meet this run with resistance. So it has, like think of it like a hurdle. Price has a hurdle to jump before we can get to that run on the high, right? Now this, right, what you're seeing, this you can look for this on an intraday level as well. Now what is it? In a bullish context, you want to see lows, you want to see the run beneath that low, the consolidation underneath that sell side liquidity. Because what does that show? That shows that they're accumulating long orders underneath a sell side liquidity pool, right? Because those sellers are all tagged in. Now, what does smart money do underneath of those? They accumulate long positions to attack what? To attack this. Now you have your drawn liquidity. Now what you're waiting for? That displacement, right? That displacement away here. Now, if you're new again and you're hearing all these words, by the time you finish all the content and everything, you'll understand what I'm saying. And on your rewatch of all the content, you'll be watching this again and it will make a lot of sense what I'm saying. You have your displacement away. Now, if you've been with me, you know exactly what I'm going to point to next. You have your displacement away, and what do you wait for? That move into the fair value gap, right? That move into the fair value gap. And on an intraday level, that's where you'll try to get in, right? On some sort of equilibrium or premium of that displacement, and then you'll try and aim for that high. Now, on a 5-minute chart, that could all be done within one session. Of course, this is a monthly chart, but the reason this is the thing, it's fractal, right? Now, we'll go to the 3-month chart. Now, we are really working into these two order block. Well, it's a one order block, but these two up close candles, right? We're really working into that. Now, this is where on the weekly, right, there is no reason to become bearish on the USD. There is no reason. We are working towards that buy side liquidity pool on the monthly that I showed you, right? If I zoom, yeah, we're working to these right here. We're working our way up there. Now, like I said before a minute ago, when we're working our way up there, we're going to be met with resistance there, and that's going to offer our retracements. Now, if I just take this off, this is what I have. So this is a fair value gap that we still have. The upper band here and the lower band here is a 3-month fair value gap, right? And CE is consequent encroachment for the weekly candle, right? So how did I get that? Well, if I just go like this, of this candle, right? Now, if we go from here to the close of that candle, you see how that's 50% of the current imbalance, right? You see the 50 here. That's why we got that. Now we keep that line onto the chart and we keep that, right? Now this down close candle is an order block, right? And if you go to the daily, don't know why it's doing that. If you go to the daily, you see that the CE on the weekly lines up with this candle as well. Now, there's also a small fair value gap to consider from here to here as well. Now, what I'm doing is I'm waiting for the market to kind of show its hand right now. After a very large expansionary week like that, I like to just take a day or 2 days just to wait and see what the market's doing, because having the retracement will be nice, but remember what we look for in a retracement. Now, a newer trader will just try and expect a retracement, but what do we look for when we expect a retracement to occur? This candle, then we'll need another candle like that, and we'll need that candle. Now, when we see that happen, right, that candle and then the candle lower, then we look to frame where the retracements are likely to end to. But for now, that has not occurred, and we don't rely on guesswork, right? Now, we still have space to move higher on the DXY. Now, the bonds, right, for a very long time, and this is all in the weekly commentary, from here, right, you see from July, I think it was the 8th of July, we wanted to see that move into the mitigation block to, fund the move into the sell side liquidity pool and attack these highs. Now, on the weekly commentary, I said, right, you see how we were rebalancing all these candles as we're going. I wanted to see this candle stay open. Why? Because it allows the move back to rebalance this, right? Because we broke the external range liquidity high here, right? Now we have this new range that we're working in. When we break external range liquidity, we want to see a move back into the internal range, right? We want to see the move back into the here. Now, where is the move that we want to see first? We want to see, from this candle's high to the open of this candle, we want to see, at least a move back there. Now, even for the bonds, right? And let's talk about current affairs for a second. The bonds are clearly seeking buy side liquidity. They're seeking higher prices. You see this area here. This is just an area full of buy stops. Look how flat the highs are. When I mean flat highs, right? This is not a flat high. This is, a pointy high. A flat high is like, you see like these, they're kind of flat, right? There's no really like a peak. Now, in my opinion, the US economy is in a recession that they don't want to admit. I mean, recession is an understatement, maybe a depression. Interest rates are at points where we just haven't seen those in ages, right? And even on a technical basis, we've swept this buy side liquidity. And what's that? That's a market structure shift, right? Now, look at the bonds, right? Now, if this oil crisis keeps going on, if these inflation measures are not being controlled, right, then what is stopping the bonds and inflation from spiraling out of control, right? Inflation spirals out of control. All it takes is the manual intervention to, you know, discuss that no, we should have further increased the rates and we'll further increase them. And they'll do that if need be. Now, how would that look on the bond chart? Increase the rate, right? Inflation's going up. There's 4.5, right? That's things to consider. Or over a long period of time, of course, this is a 3-month chart. Now, one thing I wanted to show you guys as well. If we look at the DXY, of course, we have clear buy side targets still, right? We have that, that high that I showed you on the monthly. Euro it's taken that one quite some time, right? We're looking at this low since the start of the mentorship, and this low especially as well. GBP USD took its one. Now I want to show you guys something. Let's look at the other two major pairs that are crossed to the dollar, NZD and AUD USD. Now, making this video, I messaged in the Telegram chat before that I still believe that we have a move lower on euro and pound. And why is that? Let's consider intermarket analysis. What's the relationship between these major pairs and the DXY? That they all move inversely to the DXY. Now, the relationship and the strength of that relationship differs because euro and pound have the strongest relationship with the DXY. Euro being the stronger, has the strongest one, then it's pound. And then you have NZD USD and AUD USD. They're not as strong as a relationship that Euro has with DXY, but it's still an inverse relationship. Now, what is NZD USD looking for? This sells a liquidity pool, right? AUD USD is making its way down to here, right? Now, that move to here is very long, right? That's like, I think 1,000 pips, and I don't expect that to happen quick. But it's definitely on the table. Now, for these major pairs to move down, what would euro and pound look like? For them to move down and these two to move up, is it likely or unlikely? Unlikely. So in using just that relationship that the majors have with each other, that they in general move in tandem with each other, NZD used to have sell side liquidity to attack. DXY still has that buy side liquidity pool to attack. How would euro and pound look? They would look very low, right? Now, before we touch on the intraday on how pound delivered, because I want to go over just runs on liquidity with you guys. US 500, right? Now, what was the liquidity pool that we were reaching for last week? We were looking for the run on here, right? Now, let's talk about the run there. You see from the weekly, right? And I had a discussion with someone that's kind of new to the mentorship, and he thought this is a bullish market structure shift. And I asked him, well, you were deceived from just the daily time frame. Because on the weekly, what does that look like? That's just the OTE. That's the OTE to get short, right? You have these relatively equal highs here. These candles highs, right, on a 4 hour and a daily chart, they're gonna look like relative equal highs, right? And what happened? You come up, you sweep the buy side liquidity to go lower. Remember, whenever you see that a lower high and a lower high, expect the run on one of them to go lower, right? That's very key. And just that, you can build a whole trading plan across that. I have, right, a whole model based off of a market maker sell model, market maker buy model in line with a trend line, right? If I see a nice trend line going downwards, 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 I know that trend line is going to get taken out because my bias is already bullish, right? And there's a trend line that's going down, 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 and it's going into my daily level. And then what do I wait for? Suddenly, miraculously, there'll be a news event that comes out and displacement happens and the first has taken out. And that's a smart money reversal. And then I'm framing the market maker sell model to take out the trend line. And that itself is a model, right? And essentially, it's what happened here. Now, from the weekly, you can see that we now understand that this is just a run on stops, right? So that means that this isn't what you're looking for. This is actually a market maker sell model. Initial consolidation and going up, reaccumulate, going up, reaccumulate, going up, smart money reversal. Now look, from this high, from this low, sorry, to this high, we go up and we take buy side liquidity. You see in this run higher, how you're taking buy stops and buy stops. You need that for the market structure shift. If there is no liquidity taken, do not consider your market structure shift. We discussed this a few weekly commentaries ago, right? Now what happens? This low, higher, with this low is now broken. That's your market structure shift. Now this is a daily. What can we do when it comes to a daily chart? Let me remove these annotations. So from chapter 1, right? When did that happen? So August, right? It happened in August. So what do we do? Let me remove the magnet. We go to the 1st of August. And then what do we do? Let's look back, let's just look back 60 days, just to save time. What liquidity pool is resting? What sell side liquidity pool? Because we're bearish, right? Now, when we have that market structure shift in line to our bias, what are we looking for? We're looking for sell side liquidity pools to attack. 60 days period ends here. Inside, from here where my cursor is to the right of where I drew the 1st of August, that's the liquidity pools that we're looking at. What rest there? That low rest there. That is the sell side liquidity pool that we're attacking. And when did we understand that that sell side liquidity pool was a target? Over here. And that run higher into the order block was just what? A chance again to get in line with heavy shorts daily till our liquidity pool was taken, right? Now, a lot of you asked me to touch on crypto market. Bitcoin is in a consolidation, and I expect it to go to 9K. I'll tell you why. Let's do this, right? Let's do this. Let me just change this fib. If we take, right, if I take here and this is the consolidation. Now, there's something called a measured move, and the expansion away from the consolidation area, the accumulation area, we expect it to be a multiple of the size of the consolidation. So from here to here, right? we expect it to be a deviation of it. So this was, around, so 17k to 25k is around, 8k, right? And where does that line up with? Lines up very close with 10,000. Now 10,000 as well is a nice whole number. That's why I say I expect a 10k Bitcoin, right? It's that measured move. Now, if we look at Ethereum, I point out to you, I don't know if I said it on the weekly commentary, but I definitely said it inside of the Telegram chat that we have. When we took this high and we broke beneath this low, right? Market structure shift. Now, this was that ETH merged, right? That ETH merge that was occurring. This was that ETH merge. Now, what do you see? You see that high, right? And what do you have above the high? You have this imbalance. Now, when that happens, right? You see from here, you see, forget this price happened, yeah? Forget any of this bit happened. Let's zoom into it. That retracement didn't even offer to the 50% equilibrium. And you see how they left this imbalance open. Now, another low was made, right? And that's cool. Another low was made. So then you anchor your fib here. And you see how, you know, you see how when I change that, you see how the range changes for premium and discount as well. Now, what do you use? This high now is going to be used as turtle soup, right? You're going to use that as a fake break above that high. We run that high, triggered in buy stops. Buyers are now forced into the market. Everyone that had a stop there. And it also takes out any short sellers that got in early as well. And we rebalance this range more. And then what happens? We move down. Now it's also a market maker sell model. And the reason I have this box lined out, and I think I've had this box lined out for a few weeks now. And this is where we expect, price to trade through. We don't expect it just to trade here. I'm expecting it to trade like some way down it. So let's say the low here, right? Let's use these relative equal lows here. So that's like 1,000, yeah? I want to see like 800 for ETH. At least, right? That's what I'm expecting. Now, again with the DXY, it still has a lot of space to run, right? It has at this fair value gap close and then the high above it. So you see how that lines up with all of the other markets that we looked at, right? This is how you have to conduct your intermarket analysis, and it all starts with the bonds, right? You see how it's when the bonds, this is US, yeah. You see how when the bonds were running, and that offset the entire other chain of markets. That's intermarket analysis, and it starts with the bonds, right? I'm doing some more research if there's something that goes beyond the bond, but for now we're just falling back on the bond market. You see how when the bond market was running, do you see how the DXY ran, right? And what do I say? You wait for them to be in line, because when they're in line, when the bond takes sell side liquidity and is running higher and the DXY is running with it, the DXY runs, that's going to offset foreign currency and risky asset classes like Bitcoin and Ethereum to run lower. That's why the bond is very important. This is how you conduct intermarket analysis. And then, right, you see how I'm using NZD USD and AED USD to understand that there is potential move lower for GBP USD and Euro USD before this mental shit. That's how I understood Bitcoin topped out. Why? Because I matched the top of Bitcoin with the bottom of the DXY. Bitcoin didn't have any other previous highs. When it broke the previous all-time high before 69k, people didn't really know where it was going to run to. They were just saying numbers 100k, 150k. No, you have to match it with, guess what? The time. Look at the time that DXY is probably going to run its sell side liquidity and, offer some sort of buy model. That's when Bitcoin was going to top out, and it did. And I'm using that same thing for GBP USD and Euro USD. Now I'm using NZD and AUD as my gauge. Right? It's simple stuff, isn't it? It just, your mind just wasn't open to it. That's what it is. Now it is. So let's look at GBP USD for intraday before we call this a lesson. Now, I still want to see downside on it, like I said. Don't trade this Monday as well, because Friday was a very large range day. You don't want to trade the Monday. Let Monday pass. Just let it pass. Go in Tuesday and Wednesday, right? That's Friday. Friday, Thursday, Wednesday, Tuesday, Monday. Sweet. Now let's take this off for a second. Yeah. Let's go to the daily chart. What was it? Let's go on the weekly. So we knew that this was a sell side liquidity pool, but we're going to punch down lower than that. And how do we know we're going to punch down lower than that? Because the DXY was last week, we're expecting it to run its high, right? Now let's look at this price action. This is Friday, Thursday, Wednesday, Tuesday, and that's Monday, right? Now what did we have, right? We had this candle, this is the fair value gap, three candle formation. You have the candle before, the actual candle that's going to contain the fair value gap, and the candle after. This candle's high to this candle's low is what? That's a imbalance. That's a fair value gap, and we expect those to get traded to and filled. Now, it did go and fill that, and when did it do that? This is how you have to stop weekly profiling. This was Tuesday, right? Friday, Thursday, Wednesday, Tuesday. Now, on from chapter 3, your homework that I gave you guys, and there was good intention for that homework because this is how you start framing stuff. Tuesday on a bearish week has a chance of doing what? Making the high of the week. At what? A logical daily higher time frame level. Swept Monday's high into a imbalance, and you see how the candle after done that, it's displacing away. It took the high. At the next day, you're going to go in, and what you're going to do? You're at least going for Monday's low because you took Monday's high, and you see how you closed, right? And you didn't quite take Monday's low. You're expecting to take the lows of the candles now, right? That is going to offset the move. Before you're looking for the expansionary move, you're waiting for the run on stops. This is the thing. Some of you guys are just looking for models, but your model, the first thing you need in your models, every single model, right? To my knowledge, the first thing you need is that run on stops. This is what you're looking for, right? Now I'll go back to the 1 hour. Right, so you see that was the run on the thingy, yeah, here. And now you're displacing away. Now you see Thursday offered a very nice opportunity. If we go back to the daily chart, from here now, what are we expecting? That's the displacement you're looking for. Tuesday swept, Wednesday displaced away. So what are you looking for? What did chapter 4 teach you? When you get that displacement away, you're hunting the retracement. And that's called the retracement to the displacement. That's how I taught it, right? So this is Wednesday. Now let's look at this is Thursday. Let's look at Thursday. Let's look at Thursday. Thursday pound news. Loads of it. When you see something like that, right? What happened here? Let's look at them both, yeah? Euro, this is the same high by the way. Euro didn't run as high. It wasn't allowed to, right? Because if we go back to the calendar, where's the Euro news on Thursday? It's pound. Pound is the one that's gonna go and run its side, right? Pound does what? Sweeps that. And when that happened, I was very vocal about it, and I think I posted this on my social media. That run on the 1 hour buy side liquidity, I think even on a 4 hour is a 4 hour high. Yep, look here. I'll just remove this because it's unclear. Here, right? Fills that fair value gap in, and that's what you're looking for because you already displaced on the Wednesday. You're looking now to get in line, so you want Thursday to offer that level of retracement, and guess what? The market's so perfect. It had a GBP folder. Now let's look at this even closer on the 5 to 15 minute first. It's gonna, yeah, 15 minutes fine. Now this again, just to reiterate, market structure shift. You're waiting for that liquidity pool to be run, right? Now, just coming up here and moving away, that's inducement, right? You're letting retail think that this is a support level, and you see now the sell stops, the buy stops are piling up here. It's piling up because they think, yeah, if it breaks this, that means it's gonna go higher. Then what happens, right? The news drops, and now pound is sending up higher. You know that it's sending up higher. Your eye should go here for turtle soup because look at the daily context. You've already run stops on Tuesday on the daily level and Wednesday displaced. Thursday, you're waiting for that move back into the range. Find your intraday buy side liquidity pool here. Now what's that? What happens here? That's the run on buy side liquidity. Low, higher high, buy stops run, lower low. That's a market structure shift again. Now what do? OTE here, anywhere OTE here, put your stop above here, right? Now, of course, sometimes it loses. That happens. Sometimes it gets run again, and the delivery is just not what you want it to be. Over a long period of time, though, this is something that I just look for, and it works very well over a long period of time, right? OTE from that, right? Once you've got the run on buy stops and it's a market structure shift offered, you're getting optimal trade entry from the market structure shift. Because I'll tell you why. When the market structure shift happens, you're now expecting this high to not be traded above. Why? Because it ran buy stops. In the bearish market, it's run buy stops and now it's clearly used that to fund the attack on sell side liquidity, right? Your stop loss goes above here. You don't expect it. If it trades above here, it's invalidated your trade. And that's what stop loss is. It's just a level of invalidation and the seatbelt to the trade, or insurance. Some people call it that as well. OTE, and that's it. You can hold for this low. You can hold for this low. You can partial one here, right? You could take a partial off there, and then you can close the position when it gets in. Now, you would have to hold through the day to get that, right? And then, I mean, using hindsight, you can see where the run was. I think it was over 250 pips from here, right? From here to here was like 200-ish pips. If you go into Euro, it's very clean as well, right? Now looking at Euro, what did we have? Same thing. Look, Friday, Thursday, Wednesday, Tuesday. What did Tuesday do? Tuesday ran the buy side liquidity pause into an order block. Now, if we carry that on, and also Euro has this fair value gap that's also optimal trade entry, so that's something to consider. If Euro shows willingness to go higher, watch that move into this fair value gap here. It's probably reaching for that. If we go to the 15 minute, right, you see how when that daily level was hit, that order block, and it was a run on buy side liquidity. Look at what's offered, right? All of this. Now, what do? Going into the next day, right? Going into the next day. So if we just, that's your midnight opening price. What are you waiting for? You're waiting for the run higher, the Judas, right? Imbalance here. You can go and you're looking for shorts, right? You're looking for shorts. Now, there was a trade offered in London close, which was this one that I was looking at. I didn't take a trade because I was feeling unwell this week, especially the first few days up until Friday. I was feeling quite unwell. This trade was very nice, right? You see this fair value gap here to here, right? And it was at the time of 10, 10:45, 11, right? And that's there's another kill zone called the London close, and you could frame a trade in it, but it's not as explosive as the other ones. Now, one thing with the kill zones is this. It's not illegal to trade outside the kill zones. The best probability and the setups you want to hunt are in the kill zones. You can hold trades that exceed the kill zone. Just make sure that your entry that you're looking for is inside the kill zone, right? Now, once your liquidity target's hit, exit the trade. Be careful going into the next day and holding overnight. Why? Because that Judas for the next day could really make you feel uncomfortable and lead you to, close in a little profit, stop you out if you trail the stop, or maybe go break even. Because every day you're expecting a level of Judas to be offered, right? Now it wasn't offered in the next day here, I just went down, but we're not using this to say that every single day is just not going to do that. No, the next day could have Judas swung you out of the trade, right? Now this day there was little to no protraction. There was no, protraction that was really enough to entice me. I would want to see the run on these flat highs, right? Now, at the end of London, what happened? It went up higher, comes down. What you're looking for is this. That displacement shows you that it's now attacking that drawn, like it's going lower, and you're framing it with the run on the DXY higher because you know the DXY is going for the high. If we look at the DXY as well on Tuesday, right? On Tuesday, this is Tuesday right here. Monday, Tuesday, Wednesday, Thursday, Friday. This is what I was looking at. When I saw this, right, I wanted to see it go into this fair value gap. We didn't get that. That's fine, right? It's still open. We can use it as a sell side target once the XY offers it, right? When I saw that and look at the candles move, look at the expansion away from that low, right? Taking that low and look at the move away from that sell side liquidity pool. What does that show? It shows that that sell side liquidity pool beneath these candles lows, 1, 2, 3 daily candles lows, right? That sell side liquidity was paired with smart money long positions. Look at that, right? Now what you're aiming for is that high of the range. This on euro is setting you up to go lower, right? When you see that, this fair value gap here, you see here to here, that's what I was looking for, right? You see how New York opened? That's the opening candle of New York. It's displaced minorly right away. You're framing that OTE, high to low, optimal trade entry, and you can hold it till London's close, right? Or to your sell side liquidity pool target if you don't want to sit in the trade. That's how you need to start framing it, right? And it's not hard. A lot of you are getting there, and it's never going to be easy. You see how this, right? You wouldn't have seen this if you haven't studied, because how can I just know that? And it's not cherry picking, right? It's because I've done it so many times. The repetition, the amount of times I've done it is insane. I know what I'm looking for, and that's how you have to build your models and your systems, right? You need to do the same thing so many times where, okay, I know it's coming. That fair value gap when it was there, and I saw that move back into it, I was like, yeah, it's gonna trade back to optimal trade entry, and it's gonna try to go lower. Now the absolute move lower on Friday, I didn't know it was gonna drop that much, but I was expecting lower prices overall, right? So I think we've covered quite a bit in this weekly commentary. Actually, I don't want it to be too long, but essentially, watch this move. If we offer higher prices, right, like it looks like this is a swing low point, you want to watch this move into this fair value gap here. DXY consequent encroachment. Pound, I'm going to leave alone. This is just a very large range week. I'm going to let it make a bit more sense to me, right? US 500, sell side liquidity pool here. I'm looking to trade back down here at least. ETH is, this low essentially on the daily. This sell side liquidity pool here. So that's all for this weekly commentary, and I'll probably catch you guys in the next weekly commentary, or if I have an idea to make a video during the week, I'll make a video during the week. So until then, and I'll see you guys next time.